Good evening, ladies and gentlemen. I'm Hiran Samarsingh, Head of Investor Relations and Strategy for Sunshine Holdings. And on behalf of the company and my team, I would like to welcome all of you for the third quarter results webinar for the financial year ending 31st March 2023. First, some rules. So this webinar will be recorded.
We are having a sunshine call. Naveen will also join that. Naveen is not coming for this one? No. I'll also have to call.
Sorry, guys. Can we mute everybody else? So, back to the slides. I think, as I mentioned, this webinar will be recorded and we later upload it into our website so that you can go back and refer to it. I hope to mute all participants when we start, and our CEOs will take you through the presentation. At the end of the presentation, we will open it up for questions. So you can unmute yourself and ask questions, or you can use the chat function to send in your questions. Next, I would like to introduce my team joining us from this end. We have Mr. Aruna Deeptikumar, who is the Group CFO. Mr. Shanta Bandara, CEO of Pharma Business. Mr. Sanjeev Sarnapala, who is the CEO of Sunshine Exports. Mr. Farman Niza, who is GM Sunshine Consumer Lanka. And Mr. Binesh Panangwala, who is the CEO of whatever Plantations PLC. With that out of the way, I would like to start with the corporate announcements. I think you would have seen this on the CSE already. In May 2022, which was, I think, first quarter for us, we bought back 28% of Sunshine Healthcare, which was with Abba Brothers as a result of the merger. And in compensation, we gave a 8.8% stake in Sunshine Holdings as a private placement at an agreed valuation of $60 per share. Also, during the year, or 9 months, we divested the downstream branded dairy business, which was Pride of Lonak. We sold it to Ross Dairies for about 27 million in October. And we still have the bigger farm gate business, which is under whatever Plantations PLC. I'll take you through the group performance for the last quarter. On the revenue side, we have reported 13.6 billion in revenue, up 64%, and of which I think part of it is driven by M&A growth when we bought in Sunshine Tea into the group in the beginning of the year. So that's adding part of the group. So without that, the organic growth alone is about 38%. And this is a significant achievement given the environment of contracting volumes, both in our healthcare and consumer business sectors. As you can see on the chart, the consumer, consumer which account for 41%, you can see a growth of 142. And that is mainly coming from the acquisition of Sunshine export business. Healthcare, as usual, is the biggest contributor to revenue during the quarter as well. That has grown 37% despite challenges in the market and contracting volumes. Agribusiness also, which accounts for about 15% of our group revenue in the third quarter, has gone up 27%, mainly driven by price increase and also some volume growth compared to the same quarter last year. So if you look at our ROE, that's gone down to 4.3%, almost half the last year. I think this is stemming from challenges in the operating profitability, as well as financing cost, which has significantly increased over the quarter on quarter. Leverage also has increased for us. We stand at around 30% debt to capital compared to just 22% at the same quarter last year. So this increase in leverage is also derived from the increase in short-term funding on the working capital side of it, specifically on the commodity inputs and inputs on the healthcare side. If you look at the if you look at the third quarter results, as I mentioned, revenue has been good, mainly driven by the acquisition of Sunshine Tea, and without it, it's about 37 or 38% organic. We have had some challenges in terms of margin profitability. As a result, despite the growth in revenue, our operating profit EBIT has been flat at around 1.5 billion. It has been further challenging below that line, operating line, when it comes to both financing cost and taxes. Finance cost has gone up by 454%. That's 4.5 times compared to the comparative quarter, mainly due to the increase in leverage, and also obviously, as you know, the increase in rates which peaked during that December quarter. We have also an impairment of goodwill amounting to 130 million, which was taken during the last quarter. So that also has contributed negatively to the profitability, despite not being a cash loss. PATMI is down by half almost. We are 272 million compared to 611 million same quarter last year. And EPS stands at 56 cents for the quarter. And for the 9 months, it's about 4.5 rupees. With that, I would like to hand over the forum to Shanta, who will brief you on the healthcare sector and development. Shanta, over to you.
Thank you, Hiran. Good afternoon, everyone. Let me take you through the healthcare wing of Sunshine Holdings. And just a quick snapshot on the revenue split into our different BUs, and also the asset split in comparison to the revenue. As Hiran said, the healthcare sector is the largest revenue contributor, and in healthcare sector, the pharma business, which is the agency business, and the distribution that we do is the largest part, which is 69% contributing to the healthcare sector. And devices business is at around 18%, retail 9%, and the manufacturing part is about 4%. However, the asset split, you see that the manufacturing is a little bit higher than the revenue split when it comes to revenue, because given the manufacturing is a highly capital intense areas, therefore machinery and all that has cost us about 11% in the overall asset mix. Moving on from the split of that, the overall performance of the sector, the quarter was quite a challenging quarter, where October was a very difficult month for even the healthcare business, pharma business, and the retail business. However, we reported a 37% growth, which is largely coming from the price increases that we received during the second quarter and the end of the first quarter. These have come in and contributed to the overall growth that you see as 37%. However, we suffered a significant volume loss in both devices, pharma, and the retail business that operating in the healthcare retail industry, and also hospitals. The EBIT you see is positive for the quarter, mainly coming from the price increases that I mentioned, especially the 9 months ending. However, the quarter PAT is down because of the significant impact on the cost of capital that we had to borrow at very high rates in the market that all of you are aware of, which had an impact for the quarter, as well as our PAT growth for the 9 months ending December. Although there have been significant measures to control cost in the operation. Yes, moving on from that to the market share of especially the retail pharma business, the retail market share in the private market, we continue to grow than the market, which is growing at around 34.3%, and the pharma business is growing around 35%, as you see, as per the IQVIA Q3 MAT results. And what you see here is the closest two players as per the market data that are growing in hand with us. We continue to be a significant contributor in the industry. Moving on from the market information, just a quick idea on how the dollar has moved to the price increases that I spoke about earlier. That what you see in blue is how the dollar has moved. As we all know, by March, early March, the dollar start moving from 203, which was stable for some time in the previous year, in 21 and 22, where we faced quite a significant rupee devaluation, depreciation, which resulted in the dollar to hit that 370. Right now, the dollar is around 369 to 372 operating, and also this had a direct impact on the pharma industry. Why? It is being controlled, or rather regulated, price regulated industry. So therefore, the significant impact of devaluation has been a challenge for the industry overall. Moving on from that to medical devices business, some of the related data where the devices business largely operates in the hospital segment in the industry. You see that some amount of stability in the last 2-3 quarters, and a slight improvement in the lab tests, and also in the overall hospital occupancy in the private hospitals. However, you see a slight dip from 95, 91 and going down to 84 in terms of theater, where this is reported from the data that we gathered from our teams. Moving on from the hospital data, in the devices business, directly to the pharma manufacturing, we had a very good quarter, I would say, which reported 300 million revenue for the quarter. And this also a result of some of the medical supply division orders which are being awarded, which were actually earlier, which we could not secure due to the delays. However, in the quarter, we are happy to see that the manufacturing business was able to secure these orders, and those were approved by MSD, where both the plants were fully operative in the quarter, especially in December. It was operative 24/7 to ensure that we deliver these orders in a timely manner. And also the good news is that in the 9 months ending, the business was able to report a break-even operating profit. And this is a good milestone for the business, where we see that this trend to grow into the future quarters. And what you see here is our meter dose inhalers, which are going into the government sector now, after we sanctioned the operations in the quarter. Moving on from the manufacturing to retail, again, although you see a growth reported in the quarter, it was quite a challenging quarter for the retail business as well, where we saw the reduction in footfall. The number of people walking in has gone down in the outlets that is monitored by us, which is significantly a concern for the business. The less purchases in the wellness business, where the buyer behavior has moved, the customer behavior has moved from wellness products. However, Even the pharma sales have seen a dip for the quarter in terms of volumes, although what you see here is the growth in terms of value. The loyalty engagement improvements are in process, and surely the business is adjusting into these new behavior, customer behavior, shopper buying habits, so that we are able to manage the new behavior in the quarters to come. Moving on from retail, I would like to hand over to Farman to take over the consumer presentation. Farman, over to you.
Thanks, Shanta. I think Sanjeeva will take on the slides, and then Farman will come for the local. Thanks, Shanta. Sanjeeva, over to you.
Yeah, thank you, Hiran. Good afternoon to all. Under the consumer sector, the revenue split stood almost 50-50, with the export sector at 44% and the balance separating as 37% from tea and 19% from confectionery. On the asset split, it's very much similar as 50-50 shown in the next graph. Moving on to the highlights, performance highlights. When highlighting the consumer performance, the sector recorded a revenue growth of 142% year-on-year. This growth is mainly stemming from the acquisition of the export arm Sunshine Tea. Excluding this business, the year-on-year growth stood at 46.1%. Moving on to the next slide on the export business. In terms of the export business, we are showing a slight growth in revenue for Q3 in comparison to Q2, which is mainly due to the higher tea prices during this period. In terms of export quantity, we have achieved the same volumes as Q2. However, this came at the cost of lower margins, mainly due to the high interest rates and also the higher tea prices as a result of the lower volumes that were on offer during the Q3. Now I'll pass it on to Farman to give the balance on the local business.
Good evening, everybody. I hope you can hear me. So thank you, Sanjeev. Now I'm just going to touch upon some of the areas with regard to the local business. As everybody knows, we have tea and confectionery. Confectionery is a 2.5-year business that we had acquired. In Q3, we actually did well compared to Q1, Q2. Q3 was even better. You see a 40% growth for tea and 60% for confectionery. 2 points to note, everybody. 1 point is the fact that this is price-driven growth. The industry was pressured to take price increases in an intelligent way so that we don't actually drop in market share, but we are able to manage the operations. So that is one important thing. In addition to that, during this particular period, the market, the volumes of the market actually contracted. The values of the market grew about 30%. We actually exceeded that. But compared to Q2, Q3 was a better quarter, and we hope to progress more in Q4. Yeah, next slide. Okay, so there's an important point that I like to mention in this particular slide. This talks about the costs. 80% of our costs is tea costs. And the blue line that you see is a reflection of the changes in the auction prices. You can see from early last year, the auction prices began to shoot up. There was a slight break. Again, it went sky high in middle of last year. Now, the orange color line, which reflects our price increases, you would see that there is a lag in the price increase. And the lag in the price increase happened because operationally we wanted to drive volume share during that particular time. And in Q3, we took the price increase. So, okay. So therefore, in terms of the market shares, we will see this being reflected in some way. But the price increases have happened, and you can see for one, the predominant SKU, which is whatever 200 gram, it has gone to 200 index. That will rise to perhaps even 224 from this quarter. Next slide. So we see the volume share here, ladies and gentlemen. So the yellow color bar is Sunshine, and the green color bar is Ecoterra, previously Unilever. You can see that from the beginning of the year, Ecoterra was in the range of 28. They have come down to about 24, 25, 23. We were in the range of 45, 47. Now we are coming back to that after the difficulty we had in the last 2 years. So because Ecoterra took steeper price increases over the last 6 to 7 months, after a lag, because consumers don't pick up these changes.
Farman, I think you got yourself muted. Can you unmute yourself?
Okay, fine. Where did you lose me?
The last 10 seconds maybe.
Okay, fine. So basically on the market share, so I think the point that I'm trying to say to everybody is that price increases in some of these categories, consumers take about 2 months for it to hit them because they buy grocery together. So anyway, now consumers have noticed the price increases for Laoji has taken, and because of that, there's an advantage that we have benefited, and that's what you see in the shares growing up. Okay, next slide. So confectionery, compared to tea, we were more in line with the price increases, and you can see the lag period that you see between the blue and the red is only the lag period in terms of our stock that we had in store. So apart from that, we were in line with taking the price increases, and the confectionery business has done well in Q3. I mean, it was 98% of our internal budget. It's done well. However, the market for confectionery in Q3 and Q4 has contracted versus Q2. That is a concerning thing. So maybe the question answers I can talk about it. Yeah, Hira? Yeah, so this is the market share, value market share for the confectionery business. You see 3 bars here. Dainty is 1. Then you have Darlie Butler, which is the green, and you have Perfetti, which is the blue. So you can see that we've grown in terms of a market share till middle of last year, and then we are holding ground. There is a dip that we notice in the November-December share, which we are concerned about. One of the reasons for that is because competition who was absent for much of Q2 they came back in Q3. So some of the advantage that we got there, we are not able to fully hold on. That's the reason why you see the blue and the pink narrowing down. Okay. Yeah, that's about it. So I think we'll catch up in the question answer. So I can now invite Binesh for him to take us through the plantation. Yeah.
Good afternoon, everyone. Hope I did well. Move on to agribusiness and also the whatever dairy. In terms of the top line, the revenue, it had been quite a good quarter. The third quarter had been quite a good quarter. It grew by 27.2%. The mainly was driven by the increase in price of the palm oil and also the volume increase. So the volume had been in the first quarter, the volume had been lower, but this was caught up in the third quarter because third quarter the crop had been relatively well when we compare with the second quarter as well. So in terms of the prices, I think the prices have been maintaining in the world market prices. The prices have been higher, and in the meantime, in the local market, the SCL or the special commodity levy had not changed. Therefore, the prices put together, it has to be higher. But however, I think in the other side, as like Farman also mentioned, that the demand for oil have been lesser in the third quarter. And then we have moved into that demand has been cascading down to the plant as well. Therefore, the prices have been coming down mainly because of the consumer behavior change that what we experience in the market. Then also the in terms of the GP, I think the GP margin contracted due to increased cost, mainly coming from the fertilizer cost and also purchasing crop from outside, which is we call it as bought crop, also have been a reason for a contraction of the GP. Then the hindsight of it, I think what we can see that the sales have gone up when we compare with the Q2, Q3 of last year. But however, the good sign is that now we can see the fertilizer price per ton is been coming down in the market, and then that will be established, that will come into affordable range. Then, as I mentioned, the oil production is on the increase by 15.3% year on year. Then also the palm oil growth have been 19%, and also dairy side 96%, which there have been adverse effect on increase in due to feed cost, which is offsetting gains in selling price. So in terms of the dairy, I think average selling price of dairy have been increased, but again due to the consumer behavior, we see a slight dip currently. But third quarter had been the highest ever. We have got a good price. You can see that the third quarter of the current year is much better than the previous third quarter. Usually it comes down, but it has been holding up, and also that we can see that even the current Q4 is better in terms of the crop. Move on. Yeah. So now I will move on, hand over back to Hiran, will take you through and open for any. Hiran, over to you.
Thank you, Vinesh, for that description of the agribusiness. So I think we will move on to Q&A. As I mentioned at the beginning of the webinar, you can unmute yourself and ask a question, or you can send it through the chat. You can send it to everyone so that all the CEOs can also have access to the chat and be ready for the questions. We have the first one on the pharma manufacturing side on the utilization. What sort of utilizations need to be achieved to achieve the break even, and how much utilization was there during the last quarter? And I'll answer that first. I think in terms of manufacturing, we split it into two. We have two plants. One is the older leaner manufacturing plant, and the new meter dose inhaler plant, which is commenced operations recently. So in terms of the new one, the meter dose inhaler plant, I think it was running at 100% almost, because the batch size is quite small there, and we have orders from the government for the next year and a half, because we are the only local manufacturer of MDI inhalers in the country. The older leaner manufacturing plant was operating at around 80-85%, because that has also a tablet line which was running at lower than ideal. In terms of how much the government takes on from our output, I think in total about 92 to 95% is sold to the government under the buyback agreement under local production, and the balance is sold in private market via Sunshine Pharmaceuticals. In terms of payment terms, I think what we've agreed is 100 days, but currently we are slightly running more above that. and we have taken certain steps to limit the risk and exposure to the government in terms of supplying these monies. So hope that answers the question. Okay, I think there's one on dairy from Dinesh. I think Dinesh can pick this up. Can you speak a bit about the decision to sell Pride of Lonak?
Yeah, I think the Pride of Lonak, it was a trial what we wanted to to trial out the market conditions for fresh milk, which we commenced very in small operation. And then thereafter that we thought that until that we go up to the scale of this business to a different level, that it would not be profitable or it won't be viable. So that's why we decided to sell this business as Pride of Lonak, the value addition side.
Thanks, Dinesh. So if there's any other questions, you can actually send it on the chat or unmute yourself and ask. Okay, so I think the next question is from Dinesh again. Do you have any dollar payables pending? I think to answer that broadly, I think our healthcare business and also the confectionery business, the raw materials and the inputs are all important. So in that sense, there's like the natural creditors and those are payable. Apart from that, there are no specific non-trade related payables, if I may add. Okay, I think we have a question from Kushan. I think on tea exports, Sanjeeva may be able to take this. So I will repeat the question. What sort of an optimal capacity is there for tea export quantities? Which are the main export countries and what sort of an open operating margin and the export business can achieve sustainably? I think margin-wise, we have been all over the place this quarter, given the price increase in tea. But I think Sanjeeva, would you like to elaborate on the sustainable margin and on the capacity side?
Yeah. So on capacity, we have been operating around 65 to 70% in the third quarter. This is mainly due to the low interest from most of the countries that we operate in, which was Europe and in the Far East, especially China. Due to the COVID lockdowns, the interest from there was minimal. And also with December holidays in Europe, the interest there also was a little low. So we were around 70% in capacity. With margins, I would say mainly due to the high tea prices and the interest, the margins were really cut down, as Hiran mentioned. But I would say in general terms, tea business, the bottom line margins ranges from about 1 to 3% for any mix export company, majority on bulk, and then some part of value added.
Thanks, Sanjeev. I think, Kushan, hope that answers your question. There's another one from Dinesh on the agribusiness sector. Dinesh, if you may be able to take this. The question is, has there been any movements on the resumption of palm oil planting in Sri Lanka? I think it's relating to the ban which came the year before, and we've been talking about it for the last few quarters. Vinesh, you want to elaborate on the latest situation on that?
Yeah, I think there have been some good positive movements in the recent past with regard to removing the ban on oil palm. But still it cannot happen. But hopefully that I think the government is reconsidering the ban, and they have requested for the other interested parties also to get on board and give a proper reason for the ban, and I hope we hope that it will be removed soon.
Thanks, Vinesh. Thanks. Okay, then we have a question from Shalini. What is your expectation on palm oil volumes for fourth quarter?
Yeah, I think as I mentioned before, I think the crop pattern has changed, and hence the third quarter crop also have been better than the third quarter of last year. Similarly, we hope that the same trend will continue in the fourth quarter as well.
Okay, thanks, Vinesh. Another one from Kushan. I think would be helpful if you could provide some outlook on commodity prices. Do you expect the decreasing trend to continue in tea and palm oil, given the demand pressure? I think I will ask Sanjeev to talk to us about tea, and then Vinesh can take on the palm oil question. Sanjeev?
Yeah, Hiran. With regard to tea, we still don't see much of an improvement in quantities coming into the auction. Even though most of the plantation companies are now applying the fertilizer, we don't see it immediately changing, but we expect somewhere in April, May for the quantities to increase. With that, we feel there might be a drop in prices, but currently with the limited availability, the prices may not come down because currently it's now the season for high grown tea, so the prices are maintaining at a high level.
Thanks, Sanjeev. Vinesh, you want to touch on oil?
Yeah, in terms of the palm oil, I think there have been a consumer behavioral change because the palm oil importation and also coconut oil importation, there have been a change in the recent past, or especially it was seen in the last 10 months, where the palm oil imports have declined to a very low level, whereas the coconut imports have increased, coconut oil. Therefore, what is available in the market, the coconut oil, the prices are, and the palm oil prices are same. So there is a consumer behavior which will change because since the coconut prices are going up now, and also the coconut volumes are coming down, we will see an increase in the palm oil consumption, and also that the industries will use more palm oil. So this is a trend at the moment.
Thanks, Vinesh. I think there's two questions from Dinesh on Health Guard, which I'll take. Have rental costs come down in Health Guard? It hasn't come down, but we have negotiated and managed to keep it constant at least. Given the current economic situation, most of our landlords have agreed to keep it constant. So I think that's a win for us. And in terms of the size, why does the location has to be so big? Cargill seems to think the smaller stores have much higher ROI. So I think the Cargill's, in terms of, it's difficult to compare because the other pharmacies just focus on the pharmaceuticals. whereas healthcare specifically differentiates itself from mom and pop pharmacies by adding that wellness segment, which needs a bit of space. So what has happened is, unfortunately, given the current economic situation, we have seen last quarter and maybe this quarter, the demand for wellness products has dipped, and is going against our strategy. So it is what it is. But as you rightly said, we are looking at new stores with a reduced format. So an average current healthcare store will range to about 2,000 to 2,200 square feet. I think our new format is much smaller, would be about 1,500 to 1,300 range going forward. So that will minimize the operating cost in terms of electricity, store space, and the shelf space. So hope that answers that question. We have one from Sajani. At what percentage would you would your imports of resources stand with comparison to overall sourcing? I think I would like to break it down by sector, Sajani. I think in healthcare, almost everything is imported. Even on the manufacturing, pharma manufacturing side, the API, the active pharma ingredient, is imported and then we process it locally. There is a small percentage of packing material which is sourced locally, but apart from that, everything is imported. On the consumer side of it, obviously the tea is sourced locally. The entire tea input is locally sourced. The raw materials and most of the packing materials for the confectionery side again is imported or bought from local dealers who import that. I'll move on to the question from Niroshan. Any capacity expansion plan to the medical production segment since it's almost running at full capacity? So Niroshan, I think we are slightly expanding the batch sizes of the new MDI plant. Apart from that, there won't be any major capex investment going into increased capacity. We believe that we have the machines to achieve it. I think we have to tinker with the batch sizes to get the correct mix. Moving on to a question from Anjula. Has the NSA of palm oil declined along with global market prices? Vinesh, would you mind taking that?
It are not increased locally. I think the prices have.
Sorry, the question is, has it declined, Vinesh?
No,
Along
the
with global prices.
Global palm oil prices have not declined. It have been maintaining at around $900 in the world market price. But in the local market, as I mentioned the reasons earlier, the coconut, the prices have been lower, coconut oil prices, I mean. Therefore, that the price have taken a dip in the for palm oil locally. But globally, it is maintaining at almost the same level, or it is increasing at the moment.
Okay, thanks, Vinesh. I think moving on to a question from Pujita, I think Aruna may be able to help us answer this. As per the presentation, it can be seen that almost all the SBUs are exposed to the fluctuation in the interest rate. Would appreciate if you could brief us on the measures taken to mitigate the exposure. Aruna, do you want to take that?
Yeah, Hiran. Actually, it's across the board. All companies, all corporate had this impact on the interest rate fluctuation. It was at a peak one time. Now it's slightly coming down for last 2 weeks onward. But from the group perspective, overall, our cost of funding is, the interest cost is around 22% because some of the actions that we have taken early that help us to bring down our finance cost. But some sectors had the impact around 28 to 30% during this particular quarter. But going forward, overall, I mean, we expect to come down the interest rates slightly, and we have captured those in our planning cycle as well. But negotiation is one mitigation action based on the strength of the group financial position, AA+. So we got a better advantage than I believe from the peer compared to the peer. Thanks.
Thanks, Aruna. I think there's a question from Dinesh on the pharma manufacturing space. I would like to refrain from answering that, Dinesh. I think we don't want to comment on any competitors. I think we would like to keep it focused on our performance on this forum. Sorry. There's a question from Sajani on a very generic question on the next upcoming quarter. I think as all the CEOs mentioned, in terms of consumer spending, it's going to be a challenging quarter. And we expect volumes to be at these depressed levels going forward, at least for the next few quarters. But we are going to take some price changes, especially in the consumer side, to claw back the margin that we had lost in the fourth quarter. So hope that answers in a very 30,000 level sense. Well, if there's no more questions, I think it's time for us to wrap up this session. So on behalf of the Sunshine team, I would like to thank all the analysts who have participated and engaged actively with the management team to get better clarity on our performance. So hope to see you next quarter as well.
Hiran, there is one more question. Do we take that?
Sure. We'll take it quickly. Has the Dinesh, has the war in Russia impacted the tea exports? Sanjeeva, would you mind taking that final question?
Yeah, Hiran. The war in Russia has not impacted actually where exports to Russia are concerned, but of course, definitely to Ukraine. Currently, the Russian exports or the market is still purchasing Ceylon tea. So I don't see a huge impact there. Only if the sanctions are further strengthened, then we might see some sort of an impact. But otherwise, the exports continue to happen to Russia.
Okay. Thanks, Sanjeeva. I think, sorry, I missed a question from Kushan. I think Farman, you might be able to help us with this. The question is, do you expect to do further increase of for retail tea prices, even if the auction prices remain the same? Also, can you talk a bit about the three tea brands and how it has been doing in terms of volume? And are you seeing the downgrade switching happening among those brands? Which brand is contributing to the most when it comes to the market share increase?
Okay, fine. Okay, let's ask by Kushan. No, okay, Kushan. Okay, thank you, Kushan.
It's a three-part question. So
I will just answer one by one. So do we expect further price increase, further increase in the auctions? Yes, we are actually expecting auction prices to go up. Typically, it does go up in January, February, March. So there is an expectation that it will go up. Of course, whether it will actually correct itself to what was before, we don't think it will come back to what was before 2 years ago. But any other form of correction as a result of the exchange rate, as a result of better harvest, as a result of certain other regulatory steps that the ministry is doing, because there's lot of loose tea that goes into the free market. All of those corrections can affect us positively or negatively in the next 2 quarters. So we are watchful about how the auction prices are going to go. That's one. Second is that assuming the auction prices remain the same, which is maybe 10% more than what it is now, and if it remains the same, would we take price increases? We do plan to, but it will be in small steps. The reason is because we want to bring back the wholesomeness of our gross profits. So because of that, we hope to take it, but it will happen in a far more graduated, sense, quarter on quarter. That's the second. The third thing is about the brand performance. We have Vatavalla, which is half of what you call our revenue from the 3 brands, and then we have Zesta, Rankata, which take about 25% each. So Vatavalla has been holding its market share. Rankata, which is the economy brand, has been increasing its market share. Zesta has dropped in its market share a little bit. So that's what's happening. But overall, our market share actually grown, noticeably grown in terms of volume. But in terms of value, I think I showed you in the form, the latest share we have is November, December. We are seeing a dip in terms of December value shares. November and December value shares, there's a dip. The reason is because the price increase wasn't effective. Whatever we did take in November, it will hit the market and people will start buying it in the new price, perhaps, December, January. So the January shares would be more reflective. So that's in terms of that. In terms of downgrading, yes, downgrading is happening to some extent, but not to the extent that you would think. Some people might assume that in a market like this, everybody will just go into loose tea. That's not happening. And that's not happening. Actually, people are staying within branded tea. They are trying to get into smaller pack sizes. Which brand is contributing the most when it comes to, yeah. So those are the angles here, and I think I've covered it.
Thanks, Parman. I think that covers Kushan's question.
Yeah.
There's one single question from Dinesh. I think Shanta may be able to help us with this. Have you looked at getting INR invoicing for pharmaceuticals from India? Shanta, anything on that?
No, certainly we are waiting for this option. We were looking at this with the bankers. I think Aruna also can add to what I'm going to say, is that we are waiting, and a certain amount of transactions has already started. So actually, just like dollar, INR invoicing, INR transactions, more it happens, it's easier for the bankers to quote better rates. So I think the volumes have to go up. Still the volumes are very low. The market is still have not got into this. The good thing is the Vostro accounts are being open, and it's quite positive for us to import very soon from opening INR LCs to India partners, unless Aruna wants to add anything to that.
Yeah, Shanta, you have already explained, we need more market participants to have this transaction. Yes, we are very positive on that. We are waiting for more participants to come, because it helps us to get a better rates for INR as well. Thank you.
Yeah, I think Shanta, you may be able to take the next one also, in terms of, do Indian pharmaceuticals pose a risk to Sri Lankan manufacturers with INR costing?
I think already we see India is a very big pharmaceutical player. I think if at all, in all aspects, from technical support and all knowledge coming into Sri Lanka, it's always has been a very good input from all Indian partners. And I don't think Sri Lanka is still ready to even compare costing with India, because they have massive batches, and the economies of scale is very high. So therefore, there is a lot to learn for Sri Lanka in terms of pharma manufacturing from India, starting from all aspects, and costing is a major comparator. And we are in the early stage of this, and surely there is impact. But I think most of the partners are helping and partnering to support Sri Lankan manufacturers. That's what I see in the general market.
Thanks, Shant. I think that clarifies the dynamics of local farmer manufacturing as it is. I think Farman, there's one more for you, which we'll take. I think with that we'll have to end it. Farman, if you don't mind, what is the market penetration of dainty? Example, like what proportion of the population has a dainty product every month? How is the business going to be taken forward? I think third one is a very broad question, but do you mind taking the first?
Okay. Yeah, okay. So who is asking this question? Dinesh. Yeah, Dinesh, now what happens is, I don't know what you mean by penetration in the marketing sense. When we say penetration, what it means is how many homes or buy a particular brand or product within a period of time. So what happens is that these are impulse products, which are usually and mostly had at the point of purchase, which is when you buy it at the shelf. When you buy it, when you go to a shop after a lunch, after a smoke, people buy it and they put it into their mouth. So what happens is, it's not an in-home thing. So therefore, penetration of this particular of confectionery products is not something that is captured in Sri Lanka at the moment. It's not captured because most of them are out of home consumption. But that being said, what I can tell you is that dainty is the single biggest product and SKU in the country that has the highest availability. So dainty is available in over 120,000 outlets in the country, and there's no other confectionery product that comes close to that. So that's one important point that you can note. Second is in terms of, you said what proportion of dainty has how the business going to be. Yeah, so I mean the business going to be taken for. So that's a broad question. So we are doing the basic things in terms of what you call ensuring that we have smaller pack sizes that is easy for people to take. Anyway, confectionery in Sri Lanka, people buy it in units as well. So whatever larger pack, we are trying to make it smaller, make it more accessible for people to afford. In addition to that, we are also noticing people are actually flirting between categories. When people buy the chewing gum, it's not that they always want the chewing gum, because chewing gum is not that they buy a toffee. The toffee is not that they buy chocolates. So the flirting across categories is something that we are trying to get a grip of, so that we can actually forcefully promote, the right set of products within our portfolio. Presently, we have a reasonable portfolio. Yeah, and plans are there for us to invest more operationally, at the same time come up with specific innovations for the year. Yeah.
Thanks, Farman. I think that's one quick question from Mr. Jafaji, which I'll take. I think obviously, Jafaji, our strategic direction is clear. We are always out looking for opportunities in our healthcare and consumer space, which we want to grow. But obviously, current situation is not great, and cost of capital is very high. So nothing on the pipeline right now. So hope that answers that question. And with that, I would like to wrap things up. I think we are almost just slightly over time. So on behalf of the team, I would like to thank everyone who participated and engaged with us, and hope to see you next quarter in our webinar as well. So have a good weekend, and thank you.